Good evening, ladies and gentlemen. Today is the 15th of September and it is the Wednesday before the expiry. And generally, Wednesdays tend to be quite volatile, but at the same time, Wednesdays also are one of the best days to capture fall off in premiums in OTM options. And so we had a pretty flat opening, but immense strength from there. We moved up 150 points. Even though the at the money started at the open was pricing in about 100 points, so people would have thought 17,500 would hold. That went completely out the ballpark. We had a stiff move right up. IT, tremendous amount of strength coming from there. And then Bank Nifty started to join in the party, and that was basically short covering of the calls. So steady uptrend the entire day. And my position was okay at different points. There was a point where I was up good 5 points or so, but 4.5, 5 points. But more or less that had to get burnt off in the short covering part. And I closed slightly in the green, and I think all said and done, I was quite happy with how I managed the trade. The only way that I could have done drastically better is if I was a little more aggressive in buying into the direction. At multiple points I was expecting 17,500 to hold, and even after we crossed it, my idea was that we would consolidate very close to 17,500, but the calls had a different idea altogether, wherein there was continued short covering even after that. So I hope you had a good trading day. I think if anything, the takeaway from this video should be how at the onset I kept my size lower because I was expecting an IV spike, and then I sort of added on to my position size when there was an IV spike to take a full size position. And after that, as that started going against me, I just had to manage for risk the entire day. So thank you so much for watching, and I will catch you tomorrow for the expiry. Take care.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:26. Yesterday, we closed with quite a negative on the US markets, and as of now, futures are in the green, and Asian markets are more or less relatively positive. Now, with opening once again quite flat, we've made a slight up move, and we are holding around 17,400. Majority of positions would be built around 17,400, and there are quite a few call shots at 17,400 in the system. From an overall OI perspective, 17,400 call is the maximum open interest. Now today, right at the open, there's been quite aggressive put writing all the way up till 17,500, and most of this will be just to create a cushion for existing call shots that are there at 17,400 and 17,500. So these big put options being written here is part of a straddle at 17,400, as well as these are being written to protect existing short calls, and to some extent calls have seen unwinding. So more or less with the price that we have, which is 200 in the straddle of 17,400, slightly above, so you have 107. That gives us a range of 17,300 to 17,500 for the expiry. And the only threat to that would be in case there is some kind of further short covering on the call side. But as you can see right in the morning, with people taking preemptive positions like shorting puts here, here, and here, that will protect their positions against a big up move, and that might lead to not having short covering on the call side because already preemptive protection has been purchased. So that being case, this is my position, the 17,300 and 17,500 strangle. My idea will be within this range, which is yesterday's low and yesterday's high, not to do any adjustments. So if we have an inside day, I will not be doing any adjustments at all. But today is a Wednesday, and after 2 day back-to-back days of not having any volatility, we most likely will have some amount of volatility intraday. Okay, a little bit of an explosion on the calls, and had to move up all of my put options to 17,350. Basically, a lot of strength from Reliance and Bank Nifty making a steady up move as well. And we have taken out this particular high. So we are now at a intraday lifetime high again. And to deal with this, I have moved up my put option to 17,350. Now I will let this position sit as is for about another 2 to 3 points of expansion on the position itself.
Beyond that, I will have no option but to roll away this call option. Little bit of an IV spike also, where the put options haven't given up that much value into this up move relative to how much the call options have expanded. And yeah, so currently dealing with an IV spike. Now, on a day like today, I can easily capture about 15 to 20 points on a position like this. So worst case, I should be willing to give up at least about 5 to 6. So that is going to be the plan. Okay, so something notable now is that 17400 put option is now the maximum put side open interest. There hasn't been much unwinding of the 17400 call option, which is why I would think that further upside would be limited and that it would be quite difficult to take out this particular resistance. Despite being in the money, the 17400 call option is the maximum open interest. So that sort of gives quite a contrast situation to what the charts would tell you, because neither are you seeing unwinding there. And I mean, generally in a situation like this, what you see is a large unwinding of here and shifting of it to here at least. But that's not happening. Instead, this put writing happening. So people are expecting 17500 to hold for the expiry, which is why they're going with this sort of positioning. And in fact, they're expecting there could be a good dip also below 17400, which is why this particular call is not being unwound. All that said, currently position is losing about little less than 2 points, and I'm quite comfortable considering today is a Wednesday with this given range. Currently, basically the point at which I would have to adjust is if this call starts expanding beyond about 30, right? So if this call starts expanding beyond 30, that's where I would have to adjust. And in case there's a reversal, I will wait till today's low is tested to do anything to this put option. So okay, so for a while we're holding at high levels and we continue to head higher. So new all-time high situation. And what I've done is I've rolled up my puts to 17400 because there is a big threat for even more continued expansion on these calls. There is a little bit of an IV spike where the puts haven't really given up much value into the up move, which is why I upped my quantity a little bit. I still have a lot of leftover margin, so shifting around will not be a problem. And yeah, increase my quantity slightly into the IV spike. And what I'm expecting is that we'll probably not be testing 17500 today on an intraday basis, because despite this up move, there isn't too much of an unwinding in the 17400 call, and a lot of that 17400 call is getting shifted now slowly to the 17500 level. So not something to ring alarm bells. You can see this 17500 call is gaining in open interest. So it's just a unwinding of 400 switching to 500 situation. So also I'm done currently on this sizing, down a little less than 2 points once again, and we'll keep you posted. I had to move my hedge, put side hedge to 17,000. Now in case there's a big fall off on this would be annoying to deal with, but apart from that, everything else should be all right. So more or less a little bit of weakness coming into Reliance after the initial strength, and Bank Nifty and IT looking sideways. So my idea is I moved up my puts to protect my calls. Now a lot of that call expansion has completely given away, and more or less the potential threat will be if we have a pull back to 17400 again towards the close, we start heading towards 17400. My idea is if this level is tested, first I will take off half my put quantity, and the average price at which now the maximum open interest of 17400 put has been traded is around 40 to 43, and around 40 to 43 is only where we will see a little bit of short covering being triggered. So if we head here, by this time I should be long out of the puts. So we head to 43, basically this particular point where we broke down from, but I'm going to consider the average price, and by then I should be long out of that put. Now because I'm sitting on a relatively high risk to reward position, the longer I'm able to stay in this position, the more it's going to benefit me overall. But at the same time, potential threat of these expanding into a down move would be quite high, given that even into the up move, there wasn't a lot of unwinding of the 17400 call, just an immense writing of the 17400 put. I am not sitting on the 17400 call short, which means people who did build this position. In case there's a down move, that call will give up a lot of value, so they're protected. I'm short the 17,500 call, so I don't have the same kind of protection, which is why they might be able to sit through. I'm not expecting downside below 17,400 too much, not from where we are right now anyway. But while they can continue to hold that position, it doesn't make sense for me to do that. So, okay, the time is 11:30, and the only thing to really note is that now 17,400 is no longer going to be tested, is what it seems like. IT a large amount of strength suddenly making this big up move, and Reliance is weak, trading at the day's low, and Bank Nifty is flat. What will be the problem is if Reliance bounces off the day's low and starts heading higher, and or Bank Nifty makes an up move from here, because IT has completely pushed up the index like anything, and we are now at the day's high once again. What that has done is has expanded these calls quite a bit, but the puts have given up some value, so I'm not too particularly concerned. The point at which I would be concerned is when there is when we're either just 20 points away from 17,500 and these calls are trading in the range of about 34, 35. At that point is when what I'll do is I will roll away my call. So I'll square this off and sell the 17,550 call option, and that's more or less the plan. I'm sitting in a good profit as well, so at this point it's kind of like, okay, I don't want too much fluctuation in my mark to market, so I will never keep much of a directional exposure. So anyway, right now my premiums are more or less balanced. The threat will be of like a rapid short covering expansion in the call. That is what the threat is. We'll keep you posted. The time is 11:30, and as of now, I would still think that this particular level should act as a resistance. Right? There are positions that have shifted here, but still quite a big number, and there isn't that much strength in global cues as well. So we'll have to wait and watch. Okay, time is 12 o'clock, and basically huge put writing at 17,400. We continue to hold at today's high, and what I'm seeing is there really isn't any short covering as such on the call option of 17,500, and meanwhile the put is giving up a good amount of premium, and I'll not be moving my put up beyond 17,400. I will keep the strike exactly there. So at this point I'll be trailing a stop loss on this position of 1.5 2 points, and yeah, that will hit only if this call explodes, and not much else. There is tremendous strength in IT. Reliance from the day's low has picked back up a little bit. Bank Nifty continues to be sideways as well. So IT, this particular all-time high that it made, tested here at the open, and then bam, big up move. So IT behavior is very difficult to predict. It's just getting higher, regardless of what is happening with the rupee dollar also. So at this point, it's just trailing a stop loss to exit the position. We'll keep you posted. We're currently basically at the day's high, more or less, and everything is in the green. And the mid caps are also in green, and broader market in general is in green. Okay, the IT index continues to play spoil sport, and it's heading higher, and that's pulling us closer and closer to 17,500. Now the put has given up a good amount of value, and to be frank, the call really hasn't gained much. So that covering fear has not picked up. More or less what my idea is now is I will take half this quantity and roll it to 17,550, and in case we head back to 17,450, then I'll move them down again. If not, I will keep them there, and if we continue to head higher and actually head to 17,550, then I will move the remainder of whatever is here to if we move to 17,500, I'll move the remainder to 17,550. Okay, so made that shift, moved all of my calls to 17,550, and more or less at this point I have about 75 points in either direction. And the reason I'm still in this trade is because today is a Wednesday, and there will be cooling off of either the call options or the put options by the close. Should be a good amount, so it's pretty decent risk to reward. And yeah, so my puts remain at 17,400, and my calls have been moved up to 17,550. The whole idea is that this strike will hold, but then into the up move there will be pain. So between 29, 30 and 31 is where I took my exit. So I bought back 17,500 call first at around this particular exit. Yeah, at 30, 30, 30, 30, roughly in the range of 30 more or less, and last little bit at 32. And yeah, that's about it. And I rolled it up to 17,500. I initially moved half and then I moved the other half. So all that said and done, this position still is pretty good. And overall, from the open interest as of now, what I would think would be the range is for the expiry tomorrow is 17,400 to 17,500. I don't think 17,500 will be very easily taken out like that, just like that. So that's more or less the plan. There's a little bit of cooling off in the 17,500 call now because now we've made this red candle, but my idea is I will wait for 17,460 thereabout, 17,460 thereabout, to then start bringing my calls back down to this particular strike. I'll want at least about 2 points more in this put option than there is in this call option. I don't think that'll end up happening. Right now what's happening is slowly but surely into the dip, people are covering their position wherever they are short at this thing, which is why we are holding at the higher levels. We'll keep you posted. We've still got half day left to go, and potentially this position, if nothing else, can give us at least about a realistic expectation is 8 to 10 points on this position from where we are currently. So we'll keep you posted. Okay, that upside threat felt like it was negated by these two candles. We just head to 17,460, and into those candles I moved down about 1/3 my calls to this particular strike of 17,500 once again. And yeah, the fact that we didn't go straight through will give some confidence to people to not cover yet. The same way it gave me some confidence, which is why once again I will let these calls expand if necessary all the way till about 35. And at 35, because only 1/3 of my call quantity is here, and all of my puts are at 17,400, and there is a good amount of credit there. So if required, I'll let this expand to about 35, and that point once again we'll be back to rolling up the calls. We'll keep you posted, and yeah, it's just a insane amount of strength coming from IT. Bank Nifty super duper sideways the entire day. Absolutely exactly where it's been here actually at this level since yesterday. So it's been at 36,600 since Tuesday. So that is there. And more or less at this point, the thing is, because I'm on the credit side on a Wednesday, I have a big room for error as long as I don't make some kind of blunder or get too arrogant with how long I want to keep a certain view. Like for example, when initially this 17,500 calls for getting covered, that could have worked out differently also. There could have been a quick pull to 15,700 and this could have blown up. So it was the right thing to risk off, and into the rejection, taking some little bit of risk again, and now having a slightly different equation. But in that meantime, these puts had the opportunity to lose quite a bit. So okay, that particular attempt did not work out so well because we dipped, and then from there immediately this up move, and this time the covering on the calls was quite real. So my stop hit and I moved my calls back up, and more or less this is the final position that I'm going to be sitting on as of today. And I have my exit order ready as well. What I'm doing is I'm placing limit, which is just like the round figure of multiple of 5 in terms of whichever price is higher, so that I can execute it that way. So there's no free trade concept and whatnot. And generally, whenever I'm using market orders, I'm placing it in breaks of 2,800. So I'm checking for liquidity and accordingly placing them. Also, just as we are heading into expiry, strikes which are so close, they should be relatively safe. But the tricky part will be these 50 strikes. They can there's a much higher probability of a free trade happening on a 50 strike. So all that being the case, at this point, I'm just trailing my stop loss by 1 point, and that's going to be my exit for the day. It's been quite a strong up move, all said and done. We opened kind of flat, and from there, 100-point up move. Reliance also is showing signs of having bottomed out. Okay, so little bit of IV spike as Bank Nifty made this sudden up move to the day's high, completely blew up the calls in a matter of no time. Now, the thing is, right now, the puts haven't really given up anything, and also the 17,450 put is trading at still quite a decent price. So in case we head above 17,500, I will move my put option to 17,450. And yeah, this call has to give up value. There's panic, and that's why there is this kind of an IV spike. I don't think this is something that is going to sustain in terms of pricing of both the puts and the calls together. One of them will have to give up. My trading stop loss went out the door because it expanded far too quickly. And at that point, I'm also kind of afraid to place a trade in case there is no liquidity. So by the time you can set up a limit order to do that, it would be very difficult. So here from 16 straight up all the way to 26, 10 points gain. And meanwhile, the puts gave up about 1.5 point. The put option has given up in that same candle about 2 points. I would not think that that is sustainable. And as you can see already, the call has sort of started giving up its value. Yeah, in case we hold at this level for the next 3 candles and end or break 17,500 on the upside and head higher, then I'll be moving my put options higher. So this is kind of how it works. Just like made that up, panic short covering, whatever. Not we moved 10 points from there, 15 points. But that IV spike that we saw has cooled off. So that benefits the position. That's generally why into an extreme IV spike, especially when the counter options have not given up value, and you know that the day is in your favor, it's a Wednesday, tomorrow's expiry, it's fine to sort of stay in a position. I mean, you can't stay in a position beyond what you're willing to give up. And so it's, I mean, there is a fine line there. You can't perpetually stay in a position, but when you know that these prices are not going to last, it either has to be a continued move or to justify those prices, and the other counter option has to give up, right? It cannot retain one day before expiry. So all of that being the case, we'll keep you posted. It's 1:30. We've got 2 hours left to go, and as of now, we're still holding below 17,500. This real fear would have been that we make an up move on IT and we sort of head towards 37,000 or 36,800 levels at least, but that did not happen. Okay, just moved up my put option to 17,450. Now we have clearly headed over 17,500, and the put options did give up quite a lot of value. So once again, balancing for the move, I've moved up my put option. So I'm staying equidistant from the spot at different points of time. And yeah, more or less, if we close here, this position once again should benefit quite a bit. And market didn't really fluctuate much because these calls didn't expand to the same highs that they were at earlier when there was a panic. Yeah, so when there was this panic, the high that they made, they didn't go till there. And meanwhile, puts gave up a pretty decent amount of value. Yeah, we'll keep you posted. Once again, trailing at this point of time. And the time is 1:35. Still 2 hours left to go, and currently on a 100 points triangle. We'll keep you posted. Also, just what will be the exit for the 17,450 put option? Let's go over. So it broke down from about 31. So it's trading at about 31, 32. So this starts expanding to 32, about 4 points. Then I will be out of this put option. Okay, I'm taking risk off on the entire position by switching my 100-point range to a 200-point range. Now, this continued up move expansion above 17,500 with further short covering on the calls is not something I would have expected. Basically, what I'm doing at this point is buying back this position and selling this position. It gives me lesser risk of being hurt by a move in either direction while still giving me some amount of gain from fall off in premiums by the close. There is 1.5 hours left, and yeah, I'm expecting that to be a pretty good fall off of premiums towards the close. So, and the thing is, I'm taking risk off simultaneously. So when I'm taking risk off on the calls, I'm also taking risk off on the puts, because the puts potentially could expand. If you have a quick 50-point down move, then that will really hurt the puts. Okay, basically at break even for now, and now have a risk off position. And on this position, I will basically straight up keep a 2-point stop loss. So 2 points and exit, no further adjustments and anything else beyond this. So we'll keep you posted. Time is 2:11, and
have taken off risk on both directions. My biggest issue is that my hedge is losing. My hedges lost me one entire point. Those hedges are very expensive, and in managing all of this up move, it starts to become quite a headache, because when we opened here, the pricing of risk on the 17400 was probably 100 points till the entire expiry, so that gave us 17300 and 17500. Now, even when we test 17500, ideally you would think, okay, after the initial burst of short covering, there wouldn't be so much additional perception of risk on at higher levels at 17550, but very clearly that's not the case, and quite a bit of short covering happening there, especially because bank nifty is on the move now, holding above 36800. Okay, the time is 2:45. We've got 45 minutes for market close, and we've been holding range now for a while. And into this, what is happening is, for tomorrow's positions, majority of people are carrying sideways positions around 17,500, sorry. And yeah, the most likely range for this, so we can assume that 17,400 and 17,600 should be completely like out of the cards for tomorrow, going by what the pricing of the 17,500 straddle is, which is trading at roughly about 90. So just under 89. And yeah, now obviously I will be squaring off this position before close, and even though I'll be taking the exact same position tomorrow, this kind of is what differentiates like people who just sell a position like this, which 95% of the time will end up opening with a profit on the expiry day. I don't take trades like that. It's not my cup of tea. So anyway, at this point, on my mark-to-market basis, 50,000 profit is where I exit in case this starts going down. If not, I will try and hold this till the absolute last 10 minutes and see how much I can benefit from it. One more thing, because there's no auto square off anymore, I need to ensure I square this off in the last 5 minutes, because in case by mistake I don't square it off when I carry a trade like this, I will not be able to sleep. Yeah, I'll be kicking myself. So we'll keep you posted. 45 minutes to go. Move, and what I'm doing basically, once again, I will be trailing the same 50,000 rupees mark to market exit, but I'm balancing the credit on my put option, because yeah, it will be a headache if once again we have a continued up move and that further expands the call. Yeah, balancing credit about 31 points in this 150 point spread. It expands to 32.5. That's my exit. So there is tremendous liquidity at these strikes, and I'm executing in batches of 2,800. So should be able to find liquidity as and when I place these trades. One more thing on the whole free trade thing, and this is an analogy that I'm working with, is that if there's clearly such an obvious opportunity, that opportunity cannot last for long. Like, for example, right now, all institutions who realize that due to whatever situation, there are two fundamental problems. Like, one is that in the first tick, it seems that brokers can place whatever kind of order they want at whatever price, even if they don't have the margin to place such an order. That is problematic. And the second thing being, whenever liquidity dries up, there's an immediate opportunity to take basically a perfectly market efficient trade when there's an inefficiency in the market and pricing of derivatives. So they will set up systems in place that can plug it, and as more and more institutions start doing that, to be able to find that immediate illiquid situation and get off a very good trade, I think that will reduce the number of times things like this happen. Okay, so the calls are cooling off now, and more or less I just have to keep my exit order ready. Okay, a little bit of dip in bank nifty towards the close, pulling back to 36,800 or so, and it's leading to a pretty good crash in the calls. Also, my premiums are deeply imbalanced now, so I'm using this as an exit. I will get some slippage here, unfortunately, but don't have too much of an option. Okay, I think the second part of my order is not working. Okay, that's about it. So closed in the green slightly today, all said and done. And yeah, Yeah, there was really not too much that I could have done. First of all, there was a huge trend from where we opened to where we closed. A good 150 points right from here. 150 points up move we made. More than that, actually. At one point, we were up, yeah, roughly about 150 points. And considering that there was quite a lot of stubbornness at the 17,500 call, which completely got wrecked in the 17,550 as well. I think it was an all right outcome, all said and done, and very much the position was in control. Trend is not a problem. Problem is momentum. Like problem, actually till here also is fine. This range break when that comes in, right, that starts to be a problem. And as long as it's a trending day, but there isn't too much momentum with which the market is moving, it should be all right to handle. One approach would have been to be partly directional, but invariably, like what happens is when you're at the higher end of the range, you don't want to be directionally long. I mean, that's at least the way I look at it when you're doing non-directional trading. If you're doing directional trading, you're seeing potential breakout, you're seeing underpriced calls, then you can go for that long trade. But all said and done, closing the green, and I think I'm more or less happy with how the day went. So, thank you so much for watching. I hope you had a good trading day. I hope you have kick-ass longs on the market and completely killing it. So, I will catch you tomorrow for the expiry. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.